I've just
Yeah.
started. Yeah. So, all right. Well, we'll start with the question itself. So I have selected, first of all, the questions from CIA 2 only. Most of the questions will be similar to those. And you must have already figured out that those questions are actually revolving around the same concept of um, SGST, CGST, IGST, intrastate, interstate, and utilization of credit. Just to revise a little bit before we go to the question, one small concept where, if you remember this particular table, when we had output GST liability of IGST and input of IGST, that is okay, we can adjust it. When output is IGST, input is CGST, that is also fine, we can adjust. But when the output liability is IGST, but input is SGST, that is state one, then that is not adjustable. And finally, if the output is CGST or SGST, any of those, and input credit that we have is IGST, then that is also adjustable. But the condition is, first we utilize the CGST liability, balance if any, then that will go for the SGST liability. In case you are not able to remember or getting confused in that concept, please let me know, because I think that was the only point in which few of us were confused in the beginning. Having that said, let me quickly start off this Navin problem. We have done this before, similar examples also. This was there in the CIA 2. Just to revise the concept, let's start off. Anybody saying something? Okay. So the question reads, Mr. Naveen, a dealer from Mysore buys product at 20,000 rupees. So he's buying at 20,000. He pays 6% SGST and 6% CGST to the supplier. This means whatever he pays becomes the input credit for him. Now, he further sells it to Mr. Anand. So Mr. Naveen is selling to Mr. Anand, registered dealer in Raichur. Same state, meaning thereby it is intrastate, for rupees 25,000. The sell value is 25,000 and collects GST accordingly. Further, Mr. Anand sells the same to Mr. Lalchan, Nagpur, Maharashtra, now a different state. Now the interstate comes into picture for 35,000. Charges GST, and finally Mr. Lalchan sells the product to the final customer in Maharashtra for 40,000. If you notice, Mr. Lalchan is from Maharashtra. He is also selling to customer from Maharashtra. So for him, it is intrastate only. The GST rate being same across the chain of supply, compute the GST payable by each of the parties above. Now, let's go one by one. First, Mr. Naveen. Mr. Naveen, as we have already discussed, input credit for him is 6% SGST, 6% CGST that he has already paid on the price of 20,000, right? Which comes to 1,200 CGST and SGST. Why I took CGST and SGST and not IGST? Can somebody tell?
Intrastate.
Yes. So his purchase was also from intrastate. So we are now he's eligible for GST credit of SGST and CGST only. His liability is also SGST and CGST. Sell price is 25,000. If you notice, he had sold to Mr. Anand for 25,000. So 25,000, 6% interest rate comes to 1,500 SGST, 1,500 CGST. So very simple, 1,500 CGST, 1,500 SGST, and we deduct the input credit of 1,200. The final GST liability is 600 total. The components are CGST 300 and SGST 300. No questions here, right? We have practiced this many times actually. Any doubts? Anything else to discuss apart from what we discussed as of now? Okay, fair enough. Now, Mr. Anand, very quickly, similarly, as Mr. Anand has purchased from Mr. Naveen, the credit available to him is SGST and CGST, which are 1,500 and 1,500. Whatever liability there was for Mr. Naveen, the same will be available as SGST, CGST credit for Mr. Anand. However, Mr. Anand's sell is interstate because he's selling to Lalchand from Maharashtra, which is why his liability will be IGST, which is 4,200. Now here comes the challenge, which we noticed here. Just notice these two scenarios. When our output liability is IGST, in those two cases, output liability is IGST, but our input is CGST or SGST. CGST is fine, but SGST we cannot adjust. We have discussed this many times. So 4,200, from 4,200, how did we reach 4,200? 35,000, which is the sell price, into 12%. 12% how? 6% SGST and 6% CGST. The total is IGST rate. That is our common understanding. The IGST should always be the total of SGST and CGST rate. Now that comes to 4,200. Now from that 4,200, we will deduct CGST only, which is 1,500. So our liability, final liability is 2,700. The balance 1,500 SGST, which we are not able to utilize, will be carried forward to the next month or next period, as the case may be. Understood, right? No questions? Okay. Finally, a very easy one, going forward to Mr. Lalchand. Mr. Lalchand has purchased from Mr. Anand, because of which his credit is IGST. Because as I said in the case of Naveen also, same 4,200 will be credit for Mr. Lalchand, which is 4,200 IGST. However, his sell is inside the state, so intrastate supply, which is why his liabilities are SGST and CGST. Rates are again 6%, 6%. His sell is for 40,000, if you notice here, which is why we have 2,400 SGST liability, 2,400 CGST liability. If you focus on the category 4, where we have output liability in CGST or SGST, and our input credit is in IGST, in that case, everything is fine. Everything can be utilized. Only condition is, first we go for CGST, balance if any left in the credit, we go for SGST liability. So first of all, CGST liability of 2,400 will be utilized, will be knocked off. So no CGST gone. CGST is basically knocked off. No balance of liability of CGST will exist. After that, what is the amount of credit available to us? That will be only, I think, 1,600. No, sorry, 1,800. 1,800, right? Yes, everybody agrees? So that 1,800 credit will be utilized against the SGST liability, which is 2,400. So the balance of 600 left as a net liability is SGST liability. Any confusion here, please?
No.
Okay, fair enough. If no confusion, can you please quickly do this question? Same exact question, I've just modified the values. So now Mr. Naveen is purchasing at 35,000. The rates are 9% and 9%. Yeah. And Mr. Anand, Naveen is selling to Mr. Anand for 40,000. Mr. Anand is selling to Mr. Lalchand at 50,000. Mr. Lalchand is selling to customer at 80,000. Everything else remains same, just the values are modified. Can you quickly do this and tell me the final liabilities that we have for Mr. Naveen, Mr. Anand, and Mr. Lalchand, and the nature of the liability also, whether it is IGST, CGST, SGST, or a combination of those. I have shared the question in the group also. Please refer to that. In the meantime, let me work on something else. Anyone got the answer?
It is 4050 SGST. Is that the final? That's
For whom?
the last person.
No,
Mr.
no,
Lal.
no. Let me share the answer. Give me one second.
For Naveen, it is 300 net GST.
Mr. Naveen, it's 300. Is
Yeah,
it
correct.
300 CGST, 300 SGST? You're saying? Sorry, my bad.
No,
No, it
total
should not be
300.
300. No, it should not be 300. It should be 450.
Uh, 3600. Sorry, 35,000 into 6%, right?
35? No. So 35,000 into 6% is your input tax credit, right?
Correct.
Yeah. Liability is 40,000 into 9%. Sorry, not 6%, 9%, right?
Oh, sorry, I took it 6%.
I have changed
My
that.
bad.
Yeah. No problem.
My bad.
Anessa, sorry, you said 5,400 for Lalchand, right?
No, 4050 actually I got.
Okay. Can you match and see if you have made some mistakes anywhere? Or in case
Yeah,
I have.
actually, since the beginning itself, nothing is matching for me. So I think I got the amounts incorrectly.
Okay.
I mean, I considered them wrong.
Okay.
Oh, but no. For 9% of 40,000, I got 3,600, and then the input was 9% of 35,000, which was 3150.
Correct.
So the balance was 450 each.
Correct.
And then IGST, when we are doing 9% of 50,000, that was 4,500. But we can only balance 450, right? We can't balance the whole 900.
Yes.
So then,
No, you said 450. I heard you, if I correctly, then
yes,
450.
450 only. Yeah.
No. Why 450? The whole 3,600, right?
4,500 when we are having as IGST, and the previous input credit was 450 plus 450, 900.
One second. You said 4,500 as IGST. It should be 9,000, right? IGST rate is 18%, right?
Oh, right.
Yeah.
Yes. Thank you.
Yeah, no problem.
So that is 9,000 plus. Also, I was just not using a calculator, so I did a subtraction mistake.
Okay, no problem. No. Others?
There we are just.
Go ahead.
Sorry. So there we are not considering the whole of 900, right? From 9,000, we are subtracting only 450.
Why 450?
Because only SGST can be used as input credit. Sorry, CGST can only be used as input credit for IGST, right?
Yeah, I got that. I'm talking about the amount. Why 450? It should be 3,600, right? Not 450.
But I actually subtracted again 3,150 from the 3,600.
I understood. So understand the logic there. So the reason the 3,150 was adjusted because Mr. Navin had the credit, right? He used the credit to pay the liability, but he still paid the liability, is it not? So still he has paid 3,600 liability only.
Okay. Then 5,400 is
correct.
Okay. Got it. So from 7,200, I am subtracting 5,400.
No, again the same mistake you are doing.
Oh, right.
Yes.
Thank you. One gets fully nullified, and the remaining balance is getting subtracted from 7,200.
Correct. Which gives us SGST liability of
1,800. 7,200 minus 1,800, right?
Perfect.
So 5,400.
Perfect. That's the one. Yes, that's correct. Others, are you attempting? Did anybody get the answers? Are you facing any challenge? Okay, I'll assume that you have already done it. We have to move on to a lot of other questions. I have a lot of other questions to do. Okay, in case you are facing challenge, plus just stop me and let me know if you're facing challenges for the questions. These are the questions from CIA2 again. Again, I'm going to the question number 2. Question number 2 had 2 parts. Let's practice the first one. Then we'll do some theories. Then only we'll come back to the problems. So as you can see, the concept of adjustment of credit for the liability, this is being asked in all these questions just in different ways. Earlier there were 3 dealers, now there is just one in this particular question. So different scenarios, concept is same. What is the concept that is same? Which is adjustment of credit against the liability. Let's read out the question. Following are the transactions related to Ms. Madhumita, supplier of goods. Compute the GST liability. The GST rate is 18%. Supply of goods within the state and its value is 3,300,000. Value of goods exported is 500,000. Can somebody tell me how much should he pay as a GST on the export? On export of goods, how much of GST we have to pay if the rate is 18%?
0.
0 is the correct answer. Thank you. So on export, actually, GST is completely exempted. And logic is obvious. I mean, export is promoted by the government. More export, better for the country. Now, the value of the receipt of goods from other state is 600,000. Can somebody tell me output is what type of tax? Input is what type of tax? When I say that, what do I mean? Output is CGST, SGST, or IGST? Input IGST. Are you sure?
We are saying for other state, right?
IGST. Output is CGST, SGST.
Yeah, Sami, can you please elaborate? You are right on this. Yes.
The value of receipt of goods from other state. Okay. So he's receiving in the interstate. from other state.
Yes.
So other
The
state is
purchase is from other states. Sell is inside state only. Yeah, no. So output is our CGST and SGST. Input is IGST. Okay. Now that is clear, and SGST and CGST are 9% obvious. Now let's calculate the GST payable. Simply output liability is on 300,000, 9% comes to 27,000 as CGST liability and 27,000 SGST liability. As we got to know, export is completely exempt, so 0 on that. Excuse me. Receipt of goods from other state is 600,000. So on that we have input tax of what do you say, 9% on 600,000, which comes to, sorry, 18% of 600,000 comes to 1,08,000. Yeah. Now here comes the trick. What do you think will be the liability? Final liability. Can somebody tell what is the final liability? You have the output liability, you have the credit amount. What will be the final liability? Anyone, please?
Dheeraj, can you please repeat what the trick is here?
So what I'm saying is, what is the final liability? That's what I'm asking. Our GST liability is gross liability is 27,000 CGST, 27,000 SGST. Our input tax credit is 108,000 as we calculated. Yes. What is the final liability? How much we have to pay as cash?
We don't have to, then it gets carried forward as arrear input credit or something.
We don't have to pay tax. That is correct. That's what I wanted. I mean, basically, our input tax is far more than our output tax liability. So we don't have to pay any tax, right? It's nil only. Yes. Any questions, please?
Hey, Dheeraj, in this case, we have to first adjust CGST, and then whatever is remaining can be adjusted towards SGST due, right?
Yes, that is correct.
Okay, thank you.
Yeah. So, yeah, no problem. So as the amount is far bigger than the liability, it is obvious from the face of it that there is no liability. No questions, right? I was asking an obvious question, that's all. So if you have understood this, can you please practice this question very quickly? I have modified the numbers, and let me tell you, I have modified the scenario also. It will not be 0 anymore, the answer. Here I have modified the rates to 12%. So meaning thereby SGST is 6% and CGST is 6%. Now supply of goods within the state is 700,000. Value of goods exported is 200,000, which is 2 lakhs. Value of receipt of goods, which is purchase of goods, is 500,000, which is 5 lakhs. Somebody please, very quickly. And the meeting will end in 10 minutes. Just join back. We will continue from there.
$24,000 SGST.
Can you hear me? Yeah, 24,000 SGST is absolutely correct. Yes, good one. Can you tell me why SGST, not CGST, Anissa?
IGST is, I remember it this way, IGST centers this thing, right? So it first gets nullified with CGST, which is also for the center. Remaining balance gets to
Yes, that is absolutely correct. Which is the exact thing that Sakti just reminded us of. So this is the category in which we first utilize CGST only if there is a balance to the input credit, then only that is adjusted against SGST, meaning thereby whatever liability that is left in such cases will be SGST liability only. Yeah, that is also correct. So that is a good approach actually. Easy to remember. Anybody facing any challenge, please? If not, then we will pick some quick theory questions and then we will move to again numericals. Okay, just let me know in case you are facing challenges. All right. Let me unshare this. That's fine. We can keep it as it is because we have to discuss another question here only. Let me ask a question and try to remind us all what were those theory questions a little bit. There was one discussion about composite supply and mixed supply. Anybody who remembers what were those by any chance?
In short, I can say
Yes.
composite supply is something naturally bundled. If any of the two different products are naturally bundled, for example, like packaging, if I am packing a wrapper for a soap, so the packaging, all these things, the labeling, all this stuff is a naturally bundled to that product, right? So mixed supply is something which is not naturally bundled. For example, like we have one problem which was solved by, so for example, I have a computer, I have a mouse, I have a keyboard. I can separately sell this, and then also I can club it together along with computer, and also I can sell it. So this is something called mixed supply.
Okay, fair enough. Now, can you tell me what is the difference in treatment of both the supplies? One major difference.
Mixed supply, we have to see the highest rate of percentage. That percentage has to be considered.
Highest
to multiply
among what? Highest among what?
For electronics goods, if it is electronic good, that's what I remember. 28% we were taking, but I'm not sure if it's correct or not. For example, if the product, if I have like multiple products which is being clubbed together with the principal product, there is like something called principal product, right? So in both the cases, we have principal product. One is if a principal product is like packed without naturally bundled, so that is called a composite supply. If your principal product is packed along with the like other products which is not naturally bundled, so the naturally bundled means it can be sold or separately also. But for example, like packaging of a packaging material used to pack a product, it can't be sold separately. So that is the reason it's called naturally bundled. And in case of mixed supply, like for example, I have a keyboard, mouse, and any other stuff. I need to see what is the highest percentage out of this list. If the, for example, for keyboard, if it's 28% compared to other products, then I'll be picking 28% to multiply with my total taxable amount and calculate the GST.
Okay. Understood.
Correct me if anything is
yes, indeed. That is absolutely correct. So just to remind all of us, what Sami said is absolutely correct. Very 2 or 3 things, if we remember, no, writing gets a little bit of better. Other sentences we can populate inside, like thinking about it, writing the same sentence with a different phrasing. We can populate a lot of sentences as long as we know these facts. Fact number 1, as he said correctly, one is called naturally bundled and another is not naturally bundled. What do we mean by that? Obvious, by the name itself we can understand that in composite supply, bundling should be natural. It should be the requirement. If you remember, that one example was given along with the air ticket, insurance comes into picture. So that is like by default it is there. It is not like forcefully bundled together. It is rather naturally bundled. By the nature of the business itself, those are sold together. Now, however, mixed supply, the naturally bundled will not be there, which means that suppose you see when we go brush with paste, right? Yeah, those are not naturally required to be bundled together. Rather, just as a package they sell. Those are not naturally bundled. Those are mixed supplies only. Second thing that we have to remember is the bundling should be in the ordinary course of business. This word ordinary course of business is very, very famous in tax world because see, I will tell that I have bundled a product as per myself and I consider it to be natural as per my own requirement. But there has to be a difference between a personal requirement and an ordinary course of business. So when they say naturally bundled, it should be in the ordinary course of business. So that is another phrase which is important. We should mention always. Third, last but not the least, obviously the treatment of both the things. As Sami said correctly, in case of composite supply, we actually pick the rate of the principal supply. So obviously between air ticket and the insurance, the principal service is air ticket. It is understood from the face of it all. So we take the rate of the principal supply and apply that rate for the whole composite supply. However, in case of mixed supply, we take the highest one. Suppose you sell, for example, stapler you sell and pin you sell, okay? Stapler and pin are packaged together and those are sold at a bookshop. Suppose the stapler rate is 100 rupees, just for example, and the pins are 10 rupees, just for example. Okay. And so what I'm saying is stapler is 100 and the pins are 10 rupees. Stapler GST rate is 5%, for example, and pin is 28%. Still, both of them will be charged at 28% only. What I said was, still, both of them will be charged at 28% only. The reason is, it is a mixed supply and the highest rate will be applicable to the whole mixed supply, not just one of them. No questions, right? Very, very easy to remember.
So yeah, the 28% is getting applicable on the 110 amount.
Yes.
Rather than individual.
Just not individual. Yes, that is correct. Yes. Yeah. No questions, right? Easy to understand. It's just that we have to remember those words that a teacher or a examiner looks in your paper. Number 1 is principal supply. So principal supply is not number 1. Naturally bundled and not naturally bundled, number 1. Ordinary course of business, number 2. Third is your what do you say, the rate. One is highest rate, one is principal supply rate. Yeah. So if you mention those,
Dheeraj, one question here.
Please.
These 3 things are 3 different terminologies: principal supply, composite supply, mixed supply.
Correct.
Principal supply means, for example, if I'm having product, I'm not packing it, so I'm directly selling individual product, right? For example, a notebook, I'm selling it. It is a principal product, right?
No, not that. No, not that. So when we say principal